Bob and Mary were planning to retire, but then the stock market plunged 31%. Before they could respond, their dreams of retirement were put on hold indefinitely. They were told that their problem was that they weren't diversified enough. But what does that even mean? That had been my fear too. I had always had the nagging doubt about whether my investments were diversified enough and worried that I might be taking too much risk with the stocks I owned. That's when I stumbled upon private lending in real estate. A friend mentioned it and it piqued my interest. The more I researched, the clearer it became that it could be a game changer for me. It wasn't just about spreading investment risk across different stocks, but stepping into a completely different asset class. When it comes to building diverse investment portfolio, many investors instinctively turn to the stock market. After all, that's what we're taught. Wall Street Mojo talks about diversifying by having different risk levels of stocks and bonds. And the Motley Fool talks about investing in stocks in different industries, countries, and market caps to limit risk. AGF talks about investing in different market sectors. E-Trade talks about investing in different countries. American Century Investment talks about portfolios that are not diversified or highly diversified based on stocks, cash, and bonds. And Fidelity talks about different blends of US stocks, foreign stocks, bonds, and short term investments to change from a very aggressive to a very conservative investment portfolio. What do all these examples have in common? They all limit diversification to within traditional investments like stocks and bonds. While diversifying within different types of stocks and industries can be a common strategy, it may not provide the level of protection and return that true diversification could offer. Diversification is about spreading risk across different asset classes, not just within them. By adding private lending to your portfolio, you can introduce a completely different asset class that is not correlated with the stock market. The lack of correlation means that your investment performance will not be solely tied to the ups and downs of the stock market, and that will provide you a more balanced and resilient portfolio. So if you're tired of the roller coaster ride of the stock market and want a way to diversify your investments, consider becoming a private lender in real estate. It offers stability, high return, security, predictability, and the opportunity to have a positive impact on your community. By adding private lending to your portfolio, you can achieve a higher level of diversification and enhance your financial resilience. I hope you found this information helpful. If you want to learn more, subscribe to my channel and hear more tips about private lending and real estate. You can also reach out, and I'll be happy to sit down and talk with you and share from my experience.